Hi there, Serial Trader here. I want to highlight a couple setups that I think look pretty good here for an entry pretty soon. Maybe not immediately, but something to watch for a nice entry fairly quickly here. So gold obviously had a nice move up there, and we peaked in, let's see, early September. And just looking at GLD here, so GLD peaked at 146.82, and since then it's developed as a corrective decline here. So certainly implications for further upside once this correction is complete, just based on the appearance of the decline. We're not dumping. We're not having a nice impulsive move down. We're having a very choppy, time-consuming, overlapping decline. So that's certainly a continuation pattern, and once it completes, starts turning back up again, we can look forward, likely to make new highs. So just looking at the structure here, it looks like we got a double zigzag of some sort information. So WXY, so an ABC down for W, ABCDE, triangle wave X, and now I'm debating whether we have a low already in place on GLD or if we got to come down one more time here. So if we got to come down one more time, this would all be the A wave of the Y. We're currently bouncing up in the B, or we've already made the B, and then one more dive down in C, and that would be closer to our WY equality relationship down here at 133.88. Or there is the possibility that let me just show you. We got the A, small b, this was a C, and we already have the Y wave in place, and we're already beginning the new advance here. So how you deal with that? Well, maybe you do an initial entry here. Maybe you add to it upon confirmation, breaking out of this channel, for instance. Or maybe you do an initial entry here, and if we do come down, get closer to this equality relationship, you do another entry there to establish a larger position. Take whatever position you want, divide up into a half or a third, with the idea of averaging in there in either of those two scenarios. But either way, this is clearly corrective. Certainly strongly implies that once it completes correcting, we'll begin to advance up to a new high above 146.82. So that's a nice setup that I think is not necessarily ready immediately, but it looks like it's very close to being ready. And I'll add that this will kind of coincide potentially with a risk-off environment in the overall market. So if you have a little bit of a pullback on the indices, it wouldn't be unusual to see gold start perking up during that time. Kind of the risk-off trade, long gold, sell stocks, that sort of thing. So it's not necessary to have the decline in stocks for gold to have an advance. I mean, there's certainly periods already we've seen where gold was going up and stocks were going up at the same time, so it's not mandatory, but it would probably be a fairly expected coincidence to see gold turn back up again, and then the indices to have a little bit of a pullback. But again, just looking at this on its own, this is a nice corrective pattern regardless of that correlation, and I think it's a nice potential long setup here. You can play this GLD just buying units of it and having an actual stop, or you could just play GLD calls and just buy calls with a quantity of money that you're comfortable risking. Either one is fine. Okay, so that's GLD. Nice double zig, either setting up or in place on that. Now another one is TLT. So this is the bond ETF. I think it's mostly longer term maturities, but I mean, you may not be familiar with trading bonds, but you can trade a bond ETF just like you trade anything else. You just buy units of it and buy and sell, buy options on it, whatever you want to do. And it has patterns and trends just like everything else, so there's nothing scary about it. Okay, so TLT, to me, similar looking to gold, although the nuances are a little different. This looks like a more simplistic pullback. Looks like we just got a 5 down for A, ABC up for B, and maybe working our 5 down for C. Maybe you're already in place here. Again, we're pretty close to the AC equality relationship. That'd be 133.67 on TLT. One as low as 134.45. Also, The high on TLT was 148.90, and that was on the 28th of August. So that was only within, I don't know, a week or so of the high end gold. So maybe there's some sort of correlation here. Going long bonds and long gold is more of a risk off trade. So now that equities have been kind of risk on, these have been correcting because they're more of a risk off trade. Again, not necessary. You can certainly see bond prices increase and therefore interest rates decrease at the same time that stocks are increasing. But again, wouldn't be surprised to see that correlation where if we get another rally going here from these corrections in TLT and GLD, to see that coincide with a decline in stocks or a correction in stocks. Again, not necessary. You can still trade these just on their own merit, and that's what I would suggest doing. So I like this setup. It's just as good as the gold one. Nice and clearly corrected off the high. It's actually more simplistic than the gold correction. It's just a simple ABC down 535 as opposed to the more complex double zigzag that gold is making. Again, though, basically the same implications. We have a low in place, or we nearly have a low in place. Corrections either over or almost over, and looking for another impulse wave up to higher highs on TLT. And again, you can just buy actual units of TLT, use a stop, or play it with call options. I'd suggest probably playing with call options just to lever up, but again, obviously managing risk just by how much you spend on those options. And I don't know, let's see. So if we just say, hey, the low is in place on TLT here, not saying it is, but let's pretend it is, and we'll just do some reverse fib targets for reasonable upside projections. So the 1.32, 2.0. All right. Okay, so say that's the case. So a fairly modest 1.32 reverse fib. That gets us up to 154.42 from a current price of 137.76. So if you're just going to play this conventionally and just use a stop, go long TLT units. What am I looking for here? Looking for a particular tool. Here we go. So let's say we go long here. Stop is just at the recent low. Target price up here at our initial reverse fib target. So you got a over 5-to-1 risk reward ratio. That's a pretty nice setup there. You could even give yourself a little more generosity on the stop, and still have a nice 3-to-1 risk reward ratio, giving yourself a little more wiggle room there beyond the equality relationship of A and C. Anyway, just thought I'd point out those setups. Do what you want with it, obviously, but I think they're ready fairly soon for a fresh trade entry. Okay, that should be good for now. Serial Trader signing off.